In a previous video, I noted that there was some deterioration in the internals of the stock market, and right before the Fed meeting back here, I suggested it'd be a good idea to just take profits and then see what transpired. I was afraid that a 25 basis point cut was probably not going to be enough, and the market might rebel, and that's what happened. As of Friday, I wasn't sure whether this was just a stretched daily cycle. Originally, I thought this was the daily cycle low, but it came a little bit early. I think this was 32 days, and normal tends to be about 38 to 40. So, it was possible that the market started down into a daily cycle low here, and then, the Fed wanted to only cut 25 basis points. Easier to do that if the market was close to or at the all-time highs, as opposed to moving down into correction. There would be a lot more calls for a 50 basis point cut if the market was correcting hard. So, I guess it's possible that maybe we got a little intervention here ahead of the FOMC meeting to prop the market up, make sure that it was near the highs, so the Fed had covered a cut only 25 basis points. But now we're moving down. I guess it's still possible this is just a daily cycle low, but if this holds tomorrow, because sentiment was already, short-term sentiment anyway, was already pretty excessively bearish after Friday's move, and if we continue down tomorrow despite um, bearish sentiment, that's more indicative of the beginning of an intermediate decline. And then the problem, of course, is that this intermediate rally would be left translated. And I've noted this in prior videos that left translated cycles tend to drop below the previous cycle low of the same degree. So left translated intermediate cycle odds are, I'll just say, in favor of price moving below this ICL right here. And if price drops below that, depending on how early in the daily cycle, if we go back to using this as the original daily cycle low, then this is a new daily cycle. It's topped in a left translated pattern. It's done so very early in the intermediate cycle. So there's a lot of time for this to bottom. The normal timing band would be sometime around the middle to latter part of September when we get our next FOMC meeting. If price comes down to test this pretty quickly, if we get some kind of a mini crash type event over the next week, we come down and test this, then there's a strong possibility that this is going to break. And then it's not even completely out of the question that we could test the December low. And if that happens, we're going to hear the same thing that we've heard on every one of these intermediate degree corrections, that the market is topping. And that will not be the case this time any more than it was on any of the other ones. We're just in a long sideways consolidation. Expand the chart a little bit here. We've just been in this long sideways consolidation. We had a very strong trending move here out of the elections, and that had a choice. It either had to go parabolic and just keep rising, or at some point the market had to go sideways and allow some of the long-term moving averages some time to catch up to price. Here's the 200-day moving average. This is one of the long-term moving averages that I'm referring to. See here, price got stretched pretty far above this moving average, and when you get a lot of white space between price and a moving average, Unless you're getting ready to go parabolic in a market, then there's almost always a regression event that brings price back down to test the moving average. And the further it gets stretched above it, um, it usually has to drop, to some extent below it. Kind of like a rubber band. The further it gets pulled on one side, the more it tends to overreact on the other side. So this is the 200-day moving average. Here's the 200-week moving average. You can see just a lot of white space here. I don't think by any means that we're ready for this bull market to go parabolic. I think that's probably still 10 or 15 years down the road. So, um, like I said, left translated daily or left translated intermediate cycle. Um, Definitely possible that price can drop below this pivot right here, and if it does, then we've got basically we've got all of August and maybe most of September before this daily cycle or intermediate cycle would be due to bottom. Actually, the daily and the intermediate cycle. So it's not out of the question that we can come down and test this 200-day or 200-week moving average again. Maybe even test the December low. But say again, this is a buying opportunity in a long-term bull market. So ignore the perma bears that have been calling tops for 9 years. This is not a top yet either. You'll know the top when it comes. Everyone and their cousin will be bullish. The sentiment will look the same as the Bitcoin market last year, and we just are not anywhere close to that kind of sentiment yet. We don't have little old gray-haired ladies day trading stocks yet, so we aren't at a bull market top by any means. But we probably are still stuck in this sideways consolidation pattern. Price is still too far above the long-term moving averages, and it's entirely possible that we may have to come back down and test it again this fall before we finally break free of this sideways phase and start the next leg up in the bull market.